Yeah, nice to meet you too. But did you do the fundraising and then join? It looked like the fund had started prior to you, or did you start it from the ground up in the last few months?
No, the fund was already set up before I joined, actually. It's basically the fund has been running for a year and a bit. And one of the MDs decided to leave. So they were looking for a new MD. So we started talking like 6 months ago.
I want to start with some rapid fire questions. So can I just hit you with them and then you'll answer? All right. So I think one of the keys to unlocking great entrepreneurs is helping them understand venture capital. A lot of founders, gamers, they're focused on building a business. They don't really get what is venture capital. So I'm going to go through some rapid fire questions and hopefully you can help explain why this is such an important asset and help them frame their conversations when they're pitching VCs.
Okay, perfect.
Well, all right. Rapid fire. What is venture capital?
It's a certain type of investment that actually is linked to a certain higher level of risk. So you have different stages of investment opportunities, and the one that is linked to VC is the one that comes at a very early stage, meaning in some cases that there are no revenues yet. So the investor takes certain risk because he has to look at the team and their competences and the promise and the vision of the company more than actual facts and numbers.
And on that same note, second question, why is venture capital so important to the world?
It gives businesses and teams the chance to basically dream big and build a company from scratch.
Very, very few capital allocators have the risk profile that can go that early into a garage and give them $1 million. So it's very important for getting new ideas started. Totally agree. Why do you love venture capital?
Exactly because of the same reasons. It's less about the revenues that the company is already making. It's about the team. It's about how they work together. It's about the dreams they have and the vision for a certain product. So it's much more related to intuition. It's about the intuition for myself in regards to the market, but also my intuition working with people. How will they collaborate within the team, but also with new employees, with investors like us. So there's just so much more than just numbers and financial projections.
What do you think is the most important trait for a VC to have?
Yeah, you see my background. So I'm part of the Included VC Fellowship. I think for a VC, it's important to have a diverse team, people from different backgrounds, looking at innovation in a different way, looking at people in a different way. So I think having a very open mindset and a diverse team for me is the most important way to make sure that you enlarge your scope as much as possible.
They say most great ideas look like games at the beginning. So you fundamentally have to have an open mind to find the crazy idea.
True.
What do venture capitalists actually do? So they wake up at what time and what do they do until bedtime?
I just started working with ForsVC and normally I'm not a big fan of timesheets. I'm literally clocking in and clocking out now in terms of activities to understand better what I will do most of the day. But I have already a feeling that it's mostly deal flow and everything related to deal flow. So looking at decks, researching decks, looking at the teams, having interviews with the teams, having internal meetings related to the opportunities that we see, and then of course bring the files in front of an investment committee. And then hopefully we can move to the next stage and let's close the deal. So I think that is the largest chunk of the activities. There's of course administration and legal, but I think I keep it on deal flow, management and communications.
What do you think is the hardest part of when you eventually start analyzing all that deal flow? What will be the hardest part for you?
Being an operator and founder myself in the past, I have a lot of empathy, of course, for the journey that everyone goes through. I think it will be at some point really challenging at some point to see an exciting product and an exciting team, but you still see there's something missing. So I think as a founder or someone who has mentored a lot of startups, you think, okay, maybe I can make the right introduction, or maybe I can actually help. But yeah, you don't have the time to be able to scale a business based upon that input. So I think that would be the most difficult part, is then take a step back and say, it's just not the right time. We have to move forward with other deals who are more ready.
Yeah, saying no is the hardest part. And a lot of VCs don't say no, and they kind of string entrepreneurs along. And it's just kind of unfortunately a human process. So if you're good about that, the entrepreneurs talk and you'll get the reputation as somebody that is at least honest and upfront with people, which is great.
True.
How can someone get a job in venture capital, whether they're at your level or at an associate's level, managing director or associate?
Again, looking at my background, Included VC is there to help people break into the VC industry because it is difficult if you're not like background as an investment banker or had a previous exit of millions, so you can actually start raising your fund with, of course, your own input in cash. So coming from just outside or being a founder in the past without a successful exit, it's quite difficult. And therefore, there are programs like Included VC to allow you to increase your network with VCs to have a better chance, have more visibility, which definitely helped in my case. Without Included VC, I don't think ForsVC would have considered my profile. But I think the best tip I can give people who want to break into VC is also the tip that Included VC gives, is to write deep dives about the industry that you're passionate about. Research, interview, and put everything together in content marketing. Make yourself a thought leader in the space, and then VCs will look at you and they were like, okay, maybe she's just or he's just an industry expert, and we're missing that confidence in one certain niche. So that would be my advice.
On that same note, where do you rank the ability to network in the soft skill sets that a venture capitalist needs in order to get into the industry?
I think I'm a big fan of communities. I think it definitely helps. So for me personally, I've been part of, I've built my own community with women in immersive tech. So via that community, I also was exposed to VCs that are working in that industry. And for example, Field of View Ventures is a VC I worked with because of a program we rolled out with my NGO with women in immersive tech. But I'm also, for example, part of the ICE list. It's a UK-based community of founders and investors, and they do 2 trips per year where you can network with other VCs and other founders. I was part of that because I was a founder and raised more than 350,000 euros. So I would definitely have a look at these very specific communities. And yes, of course, then again, Included VC, where it's mostly also related to networking with other VCs that have followed the fellowship and are sponsoring the program. So it's a lot. I think a lot helps to invest in communities that help you understand who is who. And also what I should also not forget is that in 2014, I worked with Take.to as a co-founder and COO. And Take.to is like the TechCrunch for Europe. It's focusing on reporting and journalistic articles related to the industry. And there I also was exposed to a lot of VCs working with Robin Wouters. So yes, networking with VCs has started early on, and I would also advise everyone to do it via the networks that are there already.
It took me a few years to build that network before I was able to get into it. All right, 2 questions left. This one's a tougher one, and I think it's a little more technical. Can you explain the math behind venture returns and why it's so important to find unicorn companies, including the power law?
For every VC fund, of course, you put forward a certain internal rate of return for a certain period that your fund lives. So for us, for example, and most funds in Europe, it's 10 years. So you have to make sure that in those 10 years, you exit the company and you make a promise on a certain ERR. So every time you make an investment in a company and the valuation has been discussed, you have to make sure that it corresponds to what you have set forward. Of course, there are exceptions and you can, of course, go lower and higher, but this is also one of the ways that a valuation will be defined if you're the lead investor with a startup. If you're not the lead investor, of course, then the other one defines it, then you follow. But if you're the lead investor, that will be definitely part of the internal discussions and a board of directors to make a certain decision on a stake and a valuation.
All right, great answer. Final rapid question. This one's a mind bender here, more of a riddle. Would a venture capitalist rather invest into a low-risk business that's doing $3 million of profit each year, but isn't growing and has no hope of a unicorn to become a unicorn? Or would that venture capitalist rather invest into a high-risk business that could become a unicorn? There's a somewhat likely chance it could. It's growing decently fast. However, there is the risk that you'll lose all of that money. Which one is more appealing to a venture capital?
I guess we have to go for the second one where there's growth. I think growth is one of the main requirements for a company. So yeah, I would go for the second one. But a good question. There are different types of VCs, of course. And if you have some public funding, maybe those public funding VCs might consider the first one as well.
Awesome job with the rapid fire. Thank you. And diving into that last one, I think that's what most entrepreneurs and just most people in general don't understand about VC. So they see, Silicon Valley Bank exploded, Theranos went out of business, it was a scam, and they think, oh, this whole industry is kind of a joke. But really, that's a feature, not a bug of the industry. Like fundamentally, you have to take the highest risk bets you can, because if you invest 100 grand into 10 companies and you lose 900,000 of it, but the 100K deal turns out to be $1 billion, no one's complaining. And so you can really have 10 Theranos and the 11th one be a Facebook, and you have a great portfolio. So I think that to me is like what most people get wrong about the industry that I hope to share with people.
Definitely. Good question.
All right. So real quick for our last 10 minutes, since we did the rapid fire, can you tell us a bit about yourself and maybe pitch the fund of like, why should VR companies, gaming companies, and metaverse companies come to your team specifically for help?
Definitely. So ForsVC is a fund that has been set up last year. It's 18 million. So it's relatively small, but also a decent amount to invest. We have been originally set up to focus on the Belgian ecosystem of video games. There's a large community, also some successful examples like Larian Studios with Baldur's Gate, Triangle Factory, some Happy Volcano. So there is already like a big community of popular game studios. And this is also the consequence of a school that is focused on that, and where a lot of talented game designers and game developers are graduating. So originally the fund has been set up to make sure that the talent stays in Belgium. So Belgium, main focus, but in the meantime, we also see that there's a big ecosystem from the Netherlands, France, and Germany. So we don't want to exclude them. So it's Belgium and neighboring countries. And we also include game tech. So not only game studios, but also game tech, which includes architecture, platform tools, and then also metaverse. So my background as a VR founder and have been working in the space since 2015, and also community leader, women in immersive tech, I come across a lot of startups in the space. So we're also looking at those, and these can be B2B and B2C. The ticket size starts with a minimum of 250,000 euros, and we can go up, of course, but depending on the number of rounds, we can go with the startup until 2 million. So the total round over different rounds would be 2 million. The two investments that we have done to date is one in Belgium called Cyborn, and they have developed a game called Hubris. It's an action VR game, has been awarded for their visuals. The other studio that we've funded yet, the Dutch-based called DeLorean, and it's a horse reality management game that is available in the browser. So not a VR, but a browser-based game. DeLorean is led by a female founder, and most of the team is also female. So I'm quite proud that with those two investments, we're already ranking nicely in terms of diversity.
You're already number one in the industry based on that investment.
So yes, everyone who is based in those countries can, of course, send us a pitch deck and looking for a ticket size that I just mentioned. And we'll be happy to have a look at the business plan and objectives.
So 250K is about 4 investments per million. So if you deploy 10 million of the 18, then you're up to 40 investments. And then you have $8 million left over. Is that how you think about the fund, where you're structuring it so you have a certain number of deals and then you save money for the best ones? Or are you deploying all of it?
It would be around 40% in the first round and then 60% in follow-ups.
Can you explain that mindset and the math of why pro rata is important? Because I think founders, again, don't quite understand that when they're negotiating and talking with venture capitalists.
It's a way for us to also lower a bit our requirements in terms of MRR and traction and what they should already have achieved. So we come in a bit lower, potentially with co-investors in the space. So we share the risk. There's more smart capital. And then when they reach certain KPIs, we come with the next chunk of money. So we can follow them and we can see how they operate. And then with a little bit more trust, we invest a higher amount. So it's basically, yes, to give give them a bit more liberty in terms of requirements to step in earlier.
All right. And final question. Can you tell the audience about yourself? Like outside of work, what do you like to do? What are things that you've found are valuable in your own life, maybe to help de-stress from work?
A good question. So I was a founder myself.
No de-stressing ever in that job.
No, and I was a solo founder. I also believe I could do everything. So that is the lesson I definitely want to give to the solo founders listening is I certainly believe that you can do everything, but some activities give you more energy than the others, and you should focus on the ones that give you more energy, and the ones that give you less energy, you have to find someone else to do them for you. So because in those years, I built the company for 5 years, and I took off, but I was always connected, and I was always thinking about the next step. I was never really disconnected. So since I've been making a change to investor, I spent more time in how to disconnect, and it's a personal thing. But for me, for example, being in the water and surfing is the best way to disconnect because you have the nature around you, you have the power of the ocean. It's just a very healing activity. And then surfing itself, I'm really bad at it, but just the fact that you are in the water in the morning and you enjoy nature and you get up on the board and you fall down again and you get up on the board again, it just gives you so much energy and satisfaction, and you don't even have to go do it well. It's just nice. So this is a personal tip I would give to people, to founders, is to find something, and you don't have to be good at it, just a way to disconnect and recharge. So
how important is being healthy to being an entrepreneur?
Very healthy. I think it's very important to be healthy, but then I'm mostly looking at mental health, because in a way the VC invests in you as a founder and your co-founder, and if you don't have the energy to continue, then the whole business that you set up, the whole dream that you have put forward, will just fall apart. So I always in due diligence or in conversations I have with founders, try to understand how they disconnect and how they find a way to basically resolve conflict. If there's someone in the team with some element, with some signs of burnout, how do you solve that as a team? How can you give someone a bit of a mental space for the other one to step up? So it's super important for a founding team to acknowledge that and identify that as well early on, and to solve it as well between them.
My last business was a virtual reality company. I think we had been around maybe 3.5 years, and ultimately I no longer had the will to continue. It was just, I had given so much and it wasn't working how it needed to be, and so I just completely burned out. And my big takeaway, which maybe this is right or wrong, but my big lesson was essentially as important as it is to go fast and feel like you're always doing things, it's actually more important to do the right things and go slow. And the mindset underlying all of that is this business isn't here in 10 years if I'm not here in 10 years. And so no matter how fast I go in the short term, it doesn't actually matter unless I'm healthy and focused and calculating the right decisions. So I've actually, on the second time around, stepped back tenfold and slowed everything down around me, and have been trying to kind of let things come to me and let decisions be made, rather than me hit the wall 500 times until it falls over and be so confident, when actually that's not the right way. Maybe I'm wrong, but it doesn't seem to be the right way to always build the business.
I couldn't agree more. And I think it's definitely even more important in industries like VR and AR, and maybe as well a little bit AI. But those industries are growing fast, and they're promising, but there's still so many struggles. So as a founder in the space, you have the day-to-day running of a startup, which is already filled with doubts and stress and uncertainties. But then you're also working in industry where a lot of things are experimental, and there's a lot of VR is big and VR is shit and AR is so, and then you have these conversations happening, and you have to just continue in the same way every day. And I think particularly in those industries, it's very important that, like you said, is to slow down and focus on making sure that you're in there for the long run and not just in the short term, because then you get burned out, definitely.
Yeah. All right. It's a great note to end on. Can you tell the listeners how to contact you and then I'll send this in the email and hopefully you get some inbound.
Definitely, that would be great. So my email address is leen@force.vc. On Twitter, I'm Linus, Lenus. So I'm active there as well. So either way works.
All right. I'll put those in the comments as well. Thank you, Leen. You've been awesome. I appreciate that a lot. And thanks for hopping on
today.
Absolutely. Yeah. Also, tell David hi from FOV. He's a friend.
Okay, I will do that.
All right. Good stuff.
You know.
Thank you. Thank you. Bye-bye.